Hello, and welcome to Everything Finance, where I help business owners get funding, startup business owners get funding, and also offer credit repair service to help not only business owners but regular people as well. So, in today's video, I'm going to be talking about what credit score do you need to buy a house? Well, I would say it depends on where you getting the loan from, because all banks are different. No two banks are the same. So some may require, maybe 620, something like that, and some may require for you to even qualify for a home is like in the 700s. So I did some research and I'm gonna go over with this particular one called Fidelity and what is required for as far as they is concerned. What do they want? So Fidelity, they saying you generally need a credit score of at least 620 to qualify for a loan to buy a home. Still, minimum credit scores for different programs can vary quite a bit based on specific terms and conditions, with some requiring 640, some saying 660, and some even saying 720. So, see, with this, it ranges different, so it just depends who you're dealing with. Your FICO score, which ranges from 300 to 850, represents how well you've managed credit and loans in the past. You can check your score in a few different ways, including possibly by looking at recent credit card bills, statements, or on your bank's or credit card issuer's website or app. The higher the score, the more trustworthy a borrower you are perceived to be, and the more likely you are to have a mortgage application approved at a lower interest rate. Some lenders, however, might work with someone with a lower credit score if they are stronger in other areas, like being able to make a large down payment. The reverse is true too. Even if you have a credit score that meets the minimum for a particular product, that may not guarantee you will be approved for that mortgage, since other elements like your employment and income history are considered too. See, so like I said, is variables, But like I said, with this particular company, we talk about with Fidelity, what Fidelity wants, So that the minimum credit score could be lower or higher, depending not only on the lender, but also on the mortgage type, which includes the following: conventional loans. These loans generally require a minimum credit score of at least 620, according to Fannie Mae, and government-sponsored enterprise that acquires mortgages offered by lenders. Then you got FHA loans. FHA loans are insured by the federal government and have looser credit and down payment requirements. You typically need a credit score of 580, but you could get approved with a score as low as 500 if you make a 10% down payment. Just know that you have to pay mortgage insurance premiums with this type of loan. Then you have VA loans through the Department of Veteran Affairs. Is it a lender itself? It helps make it easier for veterans, active service members, and eligible surviving spouses to get mortgages by guaranteeing a portion of the loan. There is no minimum credit score. Instead, each lender sets its own minimum, which is typically around 620, unless the borrower can make a large down payment. Then you have USDA loans. The United States Department of Agriculture guarantees mortgages for certain homes in eligible rural areas. The USDA doesn't have a minimum credit score requirement, but the lenders, it will. It works with due, usually requiring a score of 640 or higher. So, you may be saying, what's a good credit score to buy a house then? Well, with this particular source, a good credit score can buy a house. To buy a house is at least 700. At least. Homeowners can secure a solid mortgage term with credit scores of 700 or higher. 740 is typically the score necessary to qualify for the best rate. But there are products and programs out there that will improve interest rates for FICO scores above 760 and 780. If your credit score is below 700, you might be offered a higher interest rate on the loan. Improving your score could help though. In some cases, a 10-point improvement to a credit score could lead to a slightly lower rate, but it's not guaranteed, So, a credit score is just one of many factors when considered when they decide whether to offer someone a mortgage and with what terms. So again, it just depends on who you're dealing with, And another factor lenders consider is your debt to income ratio. That's your monthly debt obligations divided by your monthly income. Fidelity suggests trying to limit debt payments down to 36% of your income. So this is what Fidelity wants, and this is what they are typically asking for. So if you're going to go with Fidelity, that's what they want, and that's what they suggest that you have. Okay, well, that concludes this video. I hope you learned some things, and I hope I could be of help to someone out there that may wanted to know this information. Be sure to like, share, and subscribe, and don't forget that I will be coming back soon with another video, so stay tuned. Thanks for watching. Peace. See you on the next one. Yeah, bro.